Morgan Stanley this morning points out that the outperformance of unprofitable tech versus the S&P actually began before yields peaked in the spring and October. Do we have to wait for yields to back off before this is a safe bet?
Yeah, I think it's partly kind of the yield concern. Partly, I think we're also seeing tough comps for a lot of our companies. A lot of the internet companies, especially e-commerce, really benefit from COVID, obviously, over the last year or so. And now we're starting to see some tough comps, whether it's Amazon or others or eBay in the space. And so we are starting to see some pressures, not just because of yield concerns, but because the fundamentals are starting to soften a little bit across some of our companies. So when you have especially unprofitable companies and as fundamentals start to soften or tougher comps, you are going to see those companies get hit more. As prior comments suggested, we are seeing some of the bigger companies, mega caps, hold up better. Amazon, Google, Facebook, companies are trading a little bit more reasonable valuations and still good growth as well.
Chris, I wonder how you're viewing all of this, both in the context of post-COVID comps and yields.
So we just got through most of earnings season, and our focus is generally on smaller cap companies. And I would say, the predominant concern that we're seeing is really the supply chain constraints of higher commodity prices, logistical transportation, and labor issues. If we can see any thawing of those issues going into 2022, we think that those companies should begin to do better. Larger cap companies can certainly spread those costs and manage those costs better than smaller companies. But if those do begin to improve, which we do think they will, that should be a tailwind to some of the companies. I think, though, with the renomination of Powell, we do now have a greater understanding of kind of the future path of policies. And so we think that the tapering, could accelerate here as they have to battle inflation, which is hitting Main Street. As we notice that they're going to release some oil reserves to try to combat that. I mean, really, it's, we need a return to American oil independence to solve that issue. So there are issues out there, but looking to next year, if these other items begin to thaw, we think that's a little bit better.
Chris, we were having a conversation on the desk earlier about what seemed to be these outsized moves in many high multiple tech-related companies' stocks, whether up or down, frankly, when they diverge from consensus. Are you finding that's the case? And if so, what do you think it's reflective of?
So I do think that there's a risk off here. I think what Kathy Wood was mentioning earlier, that portfolio managers that begin to hug their indexes sell some of these other names that may not be in there. We're also in a period of tax loss selling. So we are seeing investors that are looking at their gains balancing out with losses. So we are seeing some acceleration to those that have underperformed here recently. So if you bought a stock earlier this year at the highs, you're looking to trim that back and see that taxable gain. We as investors have a cash position in our fund and would be taking advantage of these pullbacks. We just don't think it's over yet. We think there's still a period of time between now and year end. But we're going to be actively looking and probably deploying our cash position going into year end.
Interesting. And any particular area, sector, or specific stock that you'll be looking at buying with that outsized cash position you just referenced?
So we like the infrastructure bill that's been put in place. So broadband build out, wireless build outs. We think that that's all a great area to be. We're still at the early stages of 5G, and all of that gets connected through data centers, optical connections. So those would be areas, industries that we still like going into next year and think have a great tailwind. The other area, which we saw today, Samsung announcing building a fab here in Texas, is semi-cap equipment. That is a great tailwind for many years. It's not going to solve our semiconductor shortage issue this year, as these factories take, multiple years to put in place. But there is a geopolitical shift of bringing this home because there continues to be the threat of overseas actions against places where semiconductors could be made.